Hello and welcome to a new video on Activities. Today we're going to talk about the earnings reports of Tuesday, or yesterday for me that is now. So we're going to talk about Alphabet, we're going to talk about Microsoft a little bit, and a little bit about AMD, but mainly about Alphabet because that's of course the stock I'm invested in. The information provided by Nativities, aka me, is for informational purposes only and does not constitute financial advice. The disclaimer outlines the limitations of our financial stock advice and the risks associated with trading and investing. Before making any financial decisions, we strongly recommend consulting with a qualified financial advisor or conducting thorough research. Furthermore, there is no guarantee of accuracy. The information provided by Nativities is based on sources believed to be reliable, but we do not guarantee its accuracy, completeness, or suitability for any purposes. We strive to provide accurate and up-to-date information, but market conditions and financial news can change rapidly. Not financial advice. The content on our platform includes articles, analyses, and stock recommendations, is not intended to be financial advice. It is for informational purposes only. Users should not rely solely on this information when making financial decisions. Always seek the advice of qualified financial professionals before making any investment. Risk of loss. Investing in stocks and financial markets involves inherent risks. Past performance is not indicative of future results. Nativities is not responsible for any financial losses or damages incurred as a result of using our information. Users should be aware of the risk associated with trading and carefully consider their investment objectives and risk tolerance. Individual responsibility. Users are solely responsible for the investment decisions. Nativities does not provide personalized investment advice, and each individual's financial situation is unique. Users should consider their own financial position, risk tolerance, and investment goals before acting on information provided by Nativities. No endorsement or recommendation. Any mention of specific stocks, securities, or investment strategies on our platform does not constitute an endorsement or recommendation. Nativities is not affiliated with any companies mentioned and does not receive compensation for promoting specific stocks or securities. Market conditions. Financial markets are subject to various factors, including economic conditions, geopolitical events, and market sentiment. These factors can impact stock prices and market trends. Users should be aware of the dynamic nature of financial markets and the potential for rapid and unpredictable changes. By using Nativities services, users acknowledge and agree to the terms outlined in this disclaimer. Nativities is not liable for any direct or indirect damages arising from the use of our information. Users should exercise caution and conduct their own research before making any financial decisions. So if we talk about Alphabet, we see a strong plummet. We see that it dropped with almost 6% yesterday after hours. And that is because ad revenue was a bit disappointing. Ad revenue was a bit below what was expected. It was 65.52 billion versus 65.94 billion that was expected, which caused, of course, a plummet in the stock price. Now, this is something that's very understandable in a way that is the ad revenue business of Google is its main business. It's about 80% of the revenue. So obviously a minor change in ad revenue causes a big change for the business. And that's what we're seeing here. It's also causing a big change for the stock price. Now, what is my opinion on this reaction of the market? I think it's a bit of an overreaction. The ad revenue still grew, and the overall revenue still grew as well. As you can see here in this chart, the revenue actually grew very good. It's looking very healthy. Now, of course, net income, as we see there, is lagging a bit behind. But the revenue is growing, so I don't think that's any cause of concern. It underperforming by about 400 million. Sure, it's a big number, but in the grand scheme of things, it's just a little thing. I'm not too worried about ad revenue lagging a bit behind, as long as it's still growing, or, well, at least doing good, and as long as the other businesses at Alphabet are doing very well. But now I want to see why is the net income being suppressed so much? And that is because expenses are also growing quite a lot. Now, of course, COGS was pretty much just growing the same as revenue, so I left that out. But R&D expenditure is growing a lot. So that's the main cause for the net income being suppressed a lot here. Of course, that R&D expenditures being spent on Google Cloud and being spent on Gemini, so it's not wasted money, it's just invested, and hopefully it will, well, prove later to be very profitable, as for example Google Cloud would grow, and they would be able to do something with Gemini, and they would be just in general just creating a lot more value. Now, sales and marketing and general administrative is of course growing as well, but not as much, or not as much in percentages at least, as R&D. My notes on this are Google's cloud grew 26% in a year, which is very, very good growth. And compared to the overall cloud business of Microsoft, which is 20%, that's very, very good. But Microsoft Azure, so if you're only talking about Azure and cloud services of Microsoft, grew with 30%. So Google is a bit in between there. It's a bit in between the overall Microsoft's business and Azure's. So what really I'm very curious about is to see how much did AWS grow. And that is of course something we're going to find out on Thursday. So if AWS grew also with more than 26% in a year, then we do have some cause of concern, because then the relative market share of Google will drop. The net income grew with 23% year over year, so that's just very good. Absolutely. All the other metrics, if we're just looking at Google, the only thing that did terrible, in my opinion, is their ad revenue business. And to be honest, I don't think it did so bad to justify a 6% drop in the stock price. So I think it's a grave overreaction of the markets here. Now, furthermore, 12,000 people got laid off last year, and more people are to be expected, or more layoffs are to be expected. So that's something we like to see. And that's also what the executives have said time and time again, is that they're betting on getting more efficient with the company, reducing costs, and then with that, improving their bottom line. So very much like to see that. As well as that the severance payments are just short-term expenditures. So now they have a lot of those severance payments, a lot of those expenditures, but next year those are obviously going to be less. Well, of course, if the layoffs are less, but in the long term, I think those layoffs are very good. They become more efficient, and they just improve their bottom line, which is something we as investors like to see. Now, the severance payments are of course short term, as I already said, so I hope that in the long term, which is about 5 to 10 years, the company will become more efficient and hence create more value to the shareholders. Other bets like Waymo, I think it's Waymo, are growing in revenue, so that's very good to see. Other bets are very much growing, and just very, very good to see that those companies are doing well. But one thing or those projects are doing well, excuse me. But one thing to keep in mind is that those projects are still unprofitable. They're still losing the company money. But of course, these are projects that are running in the hopes of creating a lot more value in the future. So what is my overall opinion on Alphabet? Overall, I'm still very bullish on the stock. I'm just very bullish. And I think it's an overreaction of the markets. I think the one thing you have to realize is that revenue still grew. It just did underperform to analyst expectations. And YouTube ads is almost at analyst expectations, like 9.2 billion compared to 9.21. Alphabet is running a lot of projects. Alphabet is investing heavily in AI and in the cloud business. Alphabet's subscriptions revenue grew also. So a lot of stuff there is to like. And this one thing that the ad revenue underperformed a bit is for me not any cause of concern. I'm not too concerned with that. Now, of course, I'm very much interested in to see what Meta has to offer on Thursday, and also what Amazon has to offer on Thursday, because if their revenues, of course, grew a lot more in advertising sense, then we should maybe take a step back and reevaluate here. But if their revenue growth also underperformed as well as Alphabet's growth, then I don't see this ad revenue decline, or well, it's still growth, but underperformance as really any cause of concern. So I'm still very much bullish on Alphabet. Then if we talk about Microsoft, Microsoft dropped with about 2% despite beating expectations. Azure, as I already said, grew with 30%. In my opinion, Microsoft is still a very solid business. I just don't see any cause of concern. 2% drop despite beating expectations makes no sense to me. I think it's still a very solid business. Absolutely no cause of concern here. I think if you're invested in Microsoft, there's no reason for you now to sell. At least that's my opinion, right? Of course, you shouldn't base your whole opinion solely on my opinion or your actions on my opinion. But if I held Microsoft stock right now, I wouldn't see any cause of concern. I would still hold the stock. I wouldn't sell. So I wouldn't see any cause of concern here. And then if you talk about AMD, it plummeted with about 6.8%, almost 7%, because of the projections of AI chips did not meet Wall Street's demands. So actually what happened here is that AMD expected $1.5 billion additionally in AI chip sales in the upcoming time. But Wall Street wanted more, and this underperformed to expectations, and therefore the company dropped with about 7%. In after hours, that is, right? It already dropped 3% that day, as you can see there in the chart. And as I already said with my Nvidia video of a couple weeks ago, I wouldn't invest in this company. I think it's heavily overvalued. I think it's way too risky. I wouldn't buy AMD stock. Now, that was of course in comparison to Nvidia. If you really want to watch the full breakdown there, you can watch it. I think it's the last part, the financials part. And as I said there, I think Nvidia is just very much superior to AMD. In the business sense, is that their chips are way better, but also financially. Financially, Nvidia is a healthier company than AMD. AMD is way too overvalued. I wouldn't buy it. It's already a very risky market, completely based upon analyst expectations. So it's already very risky. And then you're also investing in a company that has worse financials to the competitor. So I would just, if I was ever to invest in the chip market, which I'm not, I don't own Nvidia stock, nor do I own any AMD stock, I wouldn't invest it in AMD. I would invest it in Nvidia if I had to pick off the two. So that's just my take, right? That's my take on the matter. But I think this kind of reinforced my opinion in that I think AMD is an inferior company to Nvidia. That was basically it for today. Those were my takes. I thank you guys very much for listening, and appreciate you guys, and I'll see you guys sometime.